market. It closed 0.2% in the red today. Mining and resource stocks pulling the all-share down. Martin Smith from eNCA Capital joins me now for more. Good evening, Martin. So, it's the same story, I would imagine. Interest rates going up to prevent decades high of inflation spurring up higher. But that would tip economies into a recession, and that's what's worrying investors. That's why we're seeing what the markets are looking like at the moment.
Yeah, absolutely. I mean, we're pretty much in bear market territory. And I think, like you mentioned, you've got the overhang of what are interest rates doing globally, recessionary fears coming through. You've also got issues with COVID in China. You've got the war going on still in Russia and Ukraine. So there's a lot of overhangs at the moment. And I think it's that uncertainty which is tipping sentiment into negative territory, which is obviously bad for markets. And I think people are just looking for some type of certainty of outcome or some type of certainty of news flow. So until that happens, I think we're going to see markets just seesawing from a volatility perspective as sentiment seesaws.
And I suppose the same theory applies to what's happening with the rand and the oil price. There you're also seeing huge swings, one day well below 16 rand to the US dollar, and the other over it. Same with the oil price. I mean, we were looking at 121, 123 not so long ago. We're back at $111. So it's a similar scenario there with uncertainty, isn't it?
Yeah, absolutely. I mean, it's pretty much everywhere. And I think the rand made a little bit of a comeback when you had risk sentiment turn a bit positive about a month ago, and we had our interest rate hike that came through. So you saw the rand pushed down to about 15.30. Now we're hovering around 16. Again, it all comes down to this uncertainty that's plaguing everything at the moment. And oil's the same. I mean, it also depends how much longer things continue the way they have in Russia and Ukraine, what European governments do going forward. Obviously, they're going to start ticking into winter in the next few months. So there's just a lot of uncertainty on the go, and that's obviously filtering through into markets.
And then, look, not much company news, but small cap building and construction materials group, Sapaku. Some good profits they've announced for the year, coming from them. But I see there's a flag, there's a warning about the fact that infrastructure projects, for example, are just not coming up at a rate, they should be. And that's a signal for what's happening with the economy going down the line. And this is one industry that will reflect that, I would imagine.
No, you're 100% right, Devan. It's very much a function of what government and infrastructure spend looks like, as well as what GDP looks like. It's very much in line with those type of themes. So the fact that they're warning against that is not really a surprise to me. I mean, the share was a little bit low on lower volatility, lower volume today. But again, it needs government infrastructure spend to come through. We need growth to come through. And I think construction stocks are all in a similar boat. They're all waiting for that catalyst. So I'm happy to sit on the sidelines. I think there's better places to make money in this market. And we still need to see the things come through, I guess.
Well, thanks very much indeed. Martin Smith from eNCA Capital, thanks indeed for your time. Well.